July 12th, Friday, guys, finally, the markets are breaking out to all-time highs, and this move is about to accelerate. So the question of the day is, did you buy the dip? For those of you trading with small accounts, today is going to be an awesome day. You can buy these options super cheap to buy. There's going to be some 500-600% returns made today, guys. But the bottom line is this. Another day, another high in the markets. That's exactly what we discussed yesterday. Okay, historic analog precisely showing a few more days higher in the green before a slight pullback. So we're staying with the positions. Again, the question is, did you close your eyes and buy the dip? The rate cut pretty much after all discussions this week is baked in, cooked in. So the markets have come down. We're not expecting any crazy volatility that could be taking the markets back below 3,000 level. That's officially looks like going to be the new support level for the market. Maybe dip slightly under like 29.90s, but not very long. What the charts are pointing is from here, we should be moving substantially higher. Very interesting observation yesterday, partially why the tech sector might have performed as well as it typically would on a day like yesterday. Healthcare, we've seen some money actually moving into healthcare. And typically when that happens, healthcare and tech sectors, they're sort of negatively correlated. Every time we see the money going into healthcare stocks, the tech stocks are just not doing as good that day. However, overall, it's a huge positive for the markets. So you've seen some huge moves in stocks like CI, UNH, Humana, and so on yesterday. At the same time, the tech did not really drop a whole lot. You had Google in the green. Amazon, after making substantial rise, made a pullback, which was an awesome buying opportunity. So congrats to you if you guys took action on that. Amazon will show you exactly what will be taking place next in just a second. Now, some of the biotech stocks got hit pretty hard, and I think they are going to be buying the dip in those as well, particularly stocks like LLY, REGN, the great biopharmaceutical companies. Solid earnings, sales, so on. So they're good quality names. So I'm going to be watching today to see if they're actually going to come in and buy the dips in these two key stocks to just kind of get an idea. But basically what this tells us, the importance of mentioning this is we are noticing some really interesting sectors that did not participate in the move higher. Last time we got closer to these levels in the market. And this time, it's nice to see that while healthcare is advancing hugely, technology sector, even though it would have dropped substantially yesterday, it actually held nicely. And so it appears that pretty much every sector is participating, with the exception maybe of a few stocks in the biotech. So that's overall a very, very bullish thing for the market. All of a sudden, we've got multiple sectors participating in moving this market higher, which creates a sustainability of the move. And VIX actually confirms that sustainability. VIX keeps dropping every day, guys. So when you see this type of conditions, okay, it's really easy to just stay the course. And when the VIX is in the low range like that, you guys know what we should do. Just buy options in the money or near the money and just stay the course. So as far as the trades, we're expecting a ton of earnings to be released next week. And important observation I didn't get to type in here is this. We're noticing that they're buying banks. Talking about various sectors, right? They're actually buying banking stocks. Goldman Sachs set a high of $211 yesterday, right? Remember, that was one of the trades. And hey, even Kramer went on TV yesterday. Remember, we guys had a trade we described a couple of weeks ago. Buy FedEx call. So it seems like everything we're announcing here, CNBC is kind of slow catching up to us. Kramer really did like a half an hour deal on FedEx yesterday saying, hey, it's time to buy the calls or buy the shares in FedEx. Well, we're ahead of time about 2 weeks. And so, boy, that was a nice trade. FedEx moved, what, to 168, so it made a pullback now. So it's interesting that he starts talking about the transports as an indication of a looming recession, but then he makes a bullish case for FedEx, which is a huge part of the transports. So he kind of had me lost there for a second, the way he explained that. But the bottom line, everybody's getting bullish. They don't know why they're getting bullish, but we do. It's because the market move formula is telling us specifically that we just need to stay bulls, guys. And for those of you that still having questions, well, why are we buying calls? Why are we buying calls? We just glance a couple of charts and reiterate some of the things that we've talked about in the last few videos. First, let's answer the question, what happened to the Amazon? The Amazon created this red candle. Now, notably, anytime you see a move down, the first thing you guys should be checking is the volume. So while Amazon did this reversal, notice it's not a black candle, which is very important because black candle tells us institutions are coming in and selling. It's just a red candle, and it stops exactly at that level from where the gap up higher happened the prior day. So you're going to see some moves like that. You're going to see these moves are going to stop. These red moves are going to stop taking place in Amazon once we're going to be above the level of 2,054. You're not going to see any more of that. As a matter of fact, you're probably going to see a straight rocket ship higher to about 2,150, 2,200. Amazon yesterday announced that it's actually going to report its earnings on July 25th. So, of course, if you buy options that are July 25th, that week expiration, they're going to be priced to the moon, potentially. But that would be the next major catalyst after the Monday catalyst. And again, sometimes the reason we want to buy stuff is because institutional investors, they don't wait for the event to take place. Sometimes they will buy something in the expectation of what is coming next. So I think from here, once we clear this level of 2050 in Amazon, it's going to be a very, very sharp shoot up higher, $100, $200 higher, guys. So get ready. It is coming. So for those of you who maybe have options expiring today, next week, we're expecting this candle today, basically the red candle from yesterday. Today we're expecting a mirror image of that candle on the way higher. In other words, we're going to repeat that move higher in Amazon, probably to a level of 2025, conservatively, maybe revisit yesterday's level, 2035, with about a 30-40% chance of actually hitting 2050 today. The markets look very complacent. The reason we may not actually hit 2050 is because of the volume. But if the volume does accelerate, we should easily move to 2050 in Amazon at some point today. So for those of you that bought the dip yesterday, congratulations. When you see these moves, again, check out not just the price section. Oh, it's dropping. Check out what is behind this price action. Behind this price action is a decelerating volume. When something drops on lower volume, that is bullish rather than bearish. Pay very close attention, right? Why are we buying calls on Amazon? There was a comment in the chat yesterday like, hey, it's at all-time highs, the RSI, this and this. Guys, the RSI actually looks really strong. You should never use RSI if you've taken the course and studied it as one sign to buy something or sell something, okay? Because RSI is actually comprised over an average of about 14 to 21 days in the price action of the stock. So just because something moves up or down on a particular day, it does not really give you a clear indication. So when you study the RSI, most of the people that just want to see, oh, it's at 80, oh shit, it's overbought, we should short it. Well, that's just a bunch of bullshit because, the stocks like Netflix historically have had a rating of RSI of 80 plus for 4 months. So you would have been sitting there for 4 months waiting for Netflix to drop, and it would have never dropped. So it's important how you actually use the RSI, and clearly combining this cup with a handle breakout pattern, which is extremely powerful, guys, because if you look at it's not just on the daily chart on Amazon that it's a breakout, it's actually on the weekly chart as well, and it coincides with a couple of the handles on all the indexes. And when you get to the point when there's nothing above but air, you understand, there's no resistance, right? I mean, you're so close, and RSI is building up. It's at 69 right now. It was just at 70 a day ago, right? It could easily break out. We could see RSI in Amazon closer to the 90 level here in the next 2 or 3 weeks. And this decent, it doesn't even have to report like a super strong earnings. I mean, it could be just a halfway decent earnings report, and this thing is going to go to the moon. So just get ready for it, guys. The answers to your questions are very simple. We're buying calls because there's just everything is screaming buy calls. The 13 markets move formula tells us to buy calls. As a matter of fact, we're heading to another possible move 777 formation, which pretty much guarantees us magnitude of more green days that are coming up, a sequence of many more green days. So, but for the purpose of Amazon, once it clears this level of 2054, we're just a day or two away from that. I mean, it's going to fly. It's going to fly, and that move could come in real fast. So the most important part, I guess maybe somebody didn't acknowledge, is the buy point, right? We've been talking about the buy point. You have to understand this cup with a handle formation. The last times we have gotten in these scenarios where Amazon was getting closer to these levels, we did not have a cup with a handle. And it's not the cup with a handle that we would typically observe, let's say, on a 1-day, 1-minute chart or 3-day, 3-minute chart. This is the real deal, guys. The way you know that this is a huge cup with a handle formation that is actually going to materialize in a substantial breakout is because you have every characteristic here, and it's on a much longer time frame. So see, this cup with a handle is created over the course of 2 months, basically a month and a half. So that's really strong. If you pull up the weekly chart, there's a cup with a handle there that's been created over the course of 2 years. Guys, when you have these lengthy time frames confirming the same patterns that are developing on shorter time frames, oh boy, that stuff is powerful. That's how markets at all historic high levels today, because you cannot simply ignore those things. And yet, you know, if you listen to the media, or maybe you've been in the markets for the last a couple of years, and you remember how every time we get closer to the revisiting those high levels, the market reverses it and goes lower. Well, this circumstance is entirely different. It's entirely different. The market conditions are entirely different. For the last few years, we've had interest rate cycle where they've been raising rates. Now they've paused the rates and they're talking about a small rate cut, but there's no real definite signs of a recession. Okay, so there will be time to short the market. Right now is not the time to be a bear, guys. Right now is the time to be a bull. So just keep buying every dip above 2,000 level in Amazon. Hey, if it drops to 1995, I would buy the dip, guys. This is what you want to do right now in these market conditions. And these breakouts, again, they are happening on these accelerating volume higher. So when this cup is created and it breaks out on accelerating volume, that is it. This is the real deal, guys. And so Amazon has been the leader as far as this cup with a handle formation. And all of the other stocks, let's say like Facebook, they've been lagging a little bit, but they're getting there too. And it's not just Facebook and some other stuff, but look the indexes. So the next very important chart I want to share with you today, guys, is the S&P chart. We are at this buy point. Here's your cup with a handle, and this is your buy point. And it makes sense. Look, the market has never, until this point, when we're trading at the level of like 2950, 2960, 2980, a lot of people that got in at those high levels the previous 3 times that the market was trading at these levels, they were creating difficulty for the market to get above this 3,000 level. But today, officially per market, we're trading above 3,000 level at a level where we've never traded before. What that tells you guys is there is no resistance up there. That's what is different now compared to the prior 3 times we got to these levels. And it's just like a knife going through butter. That's what's about to happen. That's why yesterday I kept reiterating in the video how we're going to keep hitting all-time highs every day, and they are going to be talking about it in the news. And they are going to put money in the best stocks, which means they're going to be putting money in Amazon. So just stay with the thing, trade. It is going to come through. It is going to materialize. So today is the buy point. Once you see S&P futures at like hitting the level of 3,010, 3,020 in the next 24 to 48 hours, guys, we're going to have a huge breakout high. Huge breakout high. So position yourself properly. just get that bear out of your head, get that bear out of your heart, get that bear out of you entirely. You don't want to be a bear. Okay, hopefully that makes sense. Remember that the reason these real cup with the handle patterns are so powerful because historically they produce huge breakouts, 20-30% within a very short time frame, 60 to 90 days. So when we have this going on, with markets hitting all-time high, guys, this is a historic day. I mean, this is a big celebration because thank God the market is going higher because you get to play it on the bull side, and then we're going to catch the reversal. We're going to play it on the bear side, and fortunes will be made, guys. This is absolutely insane. I mean, you don't get trading years like that every year in the market. This is history. Okay, so staying with Tesla calls, based on our analog, right? We still got some room to go. I mean, we're just here. Look, we're about to go for this. So get ready. Just get your calls, stay with them. Okay, it's going to be a nice and easy ride. Not without any bumps, right? There's clearly some some red days here on this chart, but I mean, there's going to be a little bumpy. But on those bumpy days and those red days where things just look like they're reversing, like yesterday, you guys were looking at your screen, you're like, oh shit. Oh, man, whoa, what, we're heading for a crash. Guys, I know when you were looking at your chart, especially if you're like 1 day, 1 minute chart, right? I mean, this crash yesterday, so-called intraday pullback crash, I mean, it was like 5-10 points. That ain't, but because we're so used to the markets making smaller moves, it looks like something crazy big is happening. It's time to get out. The whole thing is about to crash. I mean, this is what you get if you keep steering at these 1 day, 1 minute charts. So it really helps you guys to step aside, look at multiple time frame charts to really get an idea what's really going on. Okay, so here we are at that buy point on the S&P. Here's that move based on our historic analog. And so far, this historic analog has been pretty precise, so it makes all the sense to stay with it, right? So here we are today breaking through the top part of the tunnel officially. Okay, we are above that level pre-market. We're at 3,012, 3,011. So we're holding that nice and steady. And the way that trades pre-market, look, even pre-market, look, one dip, they buy. Second dip, they buy. Third dip, they buy. What do you guys see here? Anything that I've shown you in yesterday's video that you can point out here? Anyone? Guys, come on, look at this. What is this? What is this? That's a reverse head and shoulder. We've talked about this reverse head and shoulder all day yesterday. So some of you may be confused about the market move for yesterday was a 7. Yes, the market opens higher. Let's take a look at the chart here. So here's your gap up higher. So the condition of a 7, it opens higher. It opens in the green. So the market does open in the green. Goes slightly higher and then it starts selling off. So here's your dip number 1. Okay. Not often, typically in move 7, you could have intraday dips, multiple intraday dips, but specifically, you could easily get the first dip like right between 10 and 11. So here's your first dip. This second dip was a bit unusual, okay, but still we dipped in the red slightly and then we pulled out of that and basically we opened higher and we finished higher. In the meantime, intraday we had 2 dips. This is where I send a message telling you guys, close your eyes and buy the dip. So since then, guys, we're up 20 points. I mean, it's nice and easy. All you had to do, literally, I mean, at least you did. Clearly, you couldn't have closed both of your eyes. You could have closed one of your eyes and just hit the damn button and buy some calls, guys. It was that easy. When we keep talking about every single day about buying the dip, when it comes time to take action, okay, grab your balls and take action. Okay, just make it happen. So this behavior we've been talking about, buy the dip, buy the dip, buy the dip, buy. Just, guys, I hope you bought the dip yesterday. That's all. Today's sequence, 7-7. Guys, remember just 10 days ago how we were getting these 7s. This 7's coming in, rolling in again. And I think there is a probability we're going to get another 7 today. So it could be 7-7-7. And what do we know follows 7-7-7? We had literally 8-9 green days after that 7-7 sequence. Okay, so this is how it looks. The 7 yesterday, right? They buy the dip right here. Same characteristics observed yesterday. Where did the highest volume happen yesterday? As long as we keep seeing this behavior happen, guys, this bull market is untouchable. Okay, so yesterday, when we've created that second dip on the way higher, this is where all the action happens in the last hour of the market. This largest move identified by these two green dots, this area right here, takes place on the highest volume of the day. So again, we're seeing people running in like it's a big sale on a Black Friday and scooping up the merchandise, and it makes the markets create this really nice move going at the end of the trading session. So when you see this buying the dip followed by a gap up, guess what we're getting this morning? We're getting another gap up. When the market keeps getting up, guys, it's because you have this. Remember yesterday we've talked about, okay, Leonardo, so okay, we see this volume right here. It's high volume, but the price was not moving. Remember, I was referring yesterday to accumulation stage, and sometimes it's not reflected in the price right away, but then it is reflected in the price for the next 24 to 48 hours. So that's exactly what you're getting here, right? The price move is overall higher after we've already noticed this signal right here, guys. It was clear right here on the higher volume, but it was not reflected in the price. Now the price is catching up to the buildup in the volume, and we're getting the same thing again. This is amazing how consistent this is. So high of the day created on the volume pretty much towards the end of the day each day. So here's your 5-day sequence: 4, 12, 8, 7, 7, with a high probability of getting another 7, guys. And then we could be going into a bunch of green moves. Now, this is how it looks on the chart. Right, and I didn't have a chance to draw all the reverse head and shoulder patterns, but they're there. I mean, we're getting another one, and another one pre-market. Guys, this is beautiful. Okay, so to the moon, to the moon, to the moon, to the moon. Guys, look at this. Remember this symmetrical thing I showed you yesterday. This is, guys, you cannot be ignoring things like that. So please pay a little bit closer attention to the stuff that we talk about here in the videos. We try to break all the reasons why it makes sense to be a bull right now. So nobody that is subscribed here to the 13 Market Moves Daily Analysis, you guys should not have any question in your mind of why we're buying calls. And if you do, you can reach out to me individually, and we'll try to address it. So guys, with that said, the VIX is reacting in a way that it actually has been reacting in 2016, 17, 18. It's hitting these low levels, right? 12, 13. Pretty soon we'll be an 11 handle on the VIX. And, market will just steadily grind higher. You'll see that could take place over the course of 30 days. And so anytime you have a feeling like you're looking at your screen and the market is crashing, just remember, you should do exactly the opposite of that. Just buy the dip. Okay, so market moves for today is 1 or 7, possible 777 in the making again. And VIX is creating further downtrend and hitting further lows. Officially yesterday, opened at 12.7, went to 13.32, closed at 12.9. And so far pre-market, it's actually, this is what VIX is doing pre-market, guys. It's actually creating a gap down. So it makes perfect sense, right? Market gaps up higher. VIX is doing exactly what it's supposed to do. It's gapping down 12.67 on the VIX at the point I'm recording this. So at this point, however, very important to see is, remember, we've established the trading tunnel ranges in the VIX trading tunnel. This 1204 is your lower level of the trading range in the VIX. And considering the pre-market action, we could be hitting this low level of the trading tunnel. I mean, we're not that far off of it, right? Another 0.6. So once we get there, is the question, is the market going to stall? Because yesterday things, remember, were moving higher right out of the gate, and then they kind of stalled out. So if you see the VIX getting to the 12, pay very close attention, because we're supposed to break through the 12. So we could be finishing on the VIX at like 11.9, 11.97 today. Or if we could stall right and get to like 12.02, 12.10 or something like that. But expect a move lower in the VIX to continue, which creates perfect conditions to just buy calls and nothing but the calls. until we get to the earnings specifics next week. So, guys, with that said, just a quick reminder, if you haven't taken the Trade Like a Rockstar course that gets you prepared fully for the trading earnings season, make sure you click the button somewhere below this video, click the link, and make sure you study the heck out of this course. So with that said, guys, if you're interested in trading and producing some huge results today, just buy the dips intraday and split your positions with options that expire today and options that expire next week on the call side. Because based on the fact that there is a high probability of a move 7, that tells us that Monday, Tuesday, Wednesday are all going to be green days as well. However, our historic analog showing that this pullback that we're seeing, it could be there. Okay, but I think we're going to have a smooth ride here for the next few days, especially if we get another 7 today. So just remember, you want to own calls going into next week, especially if VIX is hitting the lows of 11, 9, 12. Guys, stay with your trades and buy the damn dip.